Right, hello everyone, welcome back to another video. It's the Trading Doz here. This is the first episode of a series that I'm going to try out and see if I get good feedback from it. So some of the things that I'm going to go over in today's video, which if you haven't read the title, which you probably would have, it's risk management. So I'm going to go over the types of positions, position sizing, planning positions, so TPs and stop losses, win-loss ratios when we're talking about positions, RR ratios, so risk and reward ratios, and then hedging positions. Right, so in this section of the video, we're going to go over position sizing, including leverage and the actual margin that you put into the position. So a lot of people have the kind of mindset that if they go in with massive leverage, it's got to be a massive position, and you're risking loads of money. As I mentioned in that section, I do use cross. So I'm going to talk about predominantly how it works with cross. But say you have a $1,000 account, you put $10 into that position at 100 times. That's going to be worth, that position will be $1,000 in size. Whereas if you put $100 of your account into a position at 10 times, that position is still sized at $1,000. So you're still risking the same when you have your stop loss in that specific area. So it kind of depends on what sort of trade you're going to do and if you need the margin. So if you're doing a major swing trade from somewhere low, and then you want to use the margin in another trade, then what you can do is you can adjust the leverage. You can adjust the leverage and take some money out of that position, and it'll still be worth the same, but then you've got more money in your account to open future positions. So the main point of this section is kind of just to be aware of the position size rather than the amount of leverage that's on the position. But you've also got to be careful you don't want to put your whole account on one position. You kind of want to manage your risk and put a smaller position on in case you want to open another position, but also so your stop loss is going to be less hard hitting on your account as a whole. Right, so now we're on to the planning positions section. This is something that helps me a lot with risk management, is planning the position before I actually enter into it. So I'm not saying never use market and never go into a position if you see a good opportunity, but I am saying always have a stop loss in mind, or if you do that, make sure you get a stop loss relatively soon afterwards. So with no analysis, let's just say that I wanted to, I don't know, long here for whatever reason. I'll just plot one of these down, work out where my stop loss is going to be depending on resistance and support levels, and then you can always work and then just get that onto your trade and your position to make sure that you know exactly when to get out of that position and you have a plan for it, because there's nothing worse than open up a position and say you're open a position and it starts going down and you're like, shit, do I close, do I not close? Oh, I might go back up, and then it dumps again. So you need to always have a plan when you go into position, because I see a lot of people asking, into this position, do I close this position, take the loss, blah blah blah. Whereas you should know exactly where your take profits are, exactly what to do when you're in those positions. Another important thing to know, or that you should do, is when you have, say, a TP in mind. Let's say this is TP1, you have a TP2 up here. When this price goes up to it, or if it goes up to it, then you take either 25 or 50% of the position, and then move your stop loss to entry. And then there's no way this winning position can turn into a losing position, because this could easily just go up here, dump. And if your stop loss is, say, here, maybe you'll still make a little bit of a profit, but you could still turn this winning position into a losing position, something that I have done before. And this is kind of the thing that I thought is the best way to do it, and I've seen other people do it as well. On to the next section. In this one, we're going to go over the win-loss ratios of your actual trades, and then also the risk to reward ratio of the trades. So, for example, say you were to open a position here, you don't want your take profit to be super close and then your stop loss super far, because that is an awful risk to reward ratio. Okay, so what you kind of want is to have anywhere from 0.2 to maybe 1 to 2%, depending on the type of position that you're going with, and you want an RR of probably about at the very least 2. I normally go for maybe 10, but I'm more of a swing trader, so you can do that. But with swing trading, you can sometimes open up the stop loss a little bit more, and then you can kind of have different levels where you dollar cost average into the position. So say it does this, and then hits your TPs, hopefully. But you still just have to be wary that this stop loss hit, and that you need this stop loss to be in a position where you're happy to lose that. Want it to hit, and then your account get liquidated, or that you're really in a bad mindset, want to revenge trade because your stop loss hit, this to be in a comfortable area. You also, a good thing to note with having this sort of risk to reward, so use this for an example here, is that you can lose this trade and then lose another trade, and you can lose 3 trades, 4 trades even. But if you get that one winning hits the TPs, you're in profit overall. So you don't need like a 75% win. You need, even a 25, 50, 35, 45, whatever percent win, and you'd still be profitable, because of the overall risk reward ratio that you use. Okay, so this section may not be useful for everyone's type of trading style, but personally I quite like the idea of a hedged position. You do need to change a setting in your exchange of choice. So normally it will be wherever it is. Here we go, position mode. So you want to change this to hedge mode, okay? And this will allow you to open a short position and a long position on one specific tick. For example, say if I think the price overall is going to go up, so I'm holding a swing long from the bottom, for example. But I think in the short term that the price is going to go down, I can then run this sort of position. So then if the price does do this, for example, you can enter back into your long here. You can enter more into your long here, should I say, and then take your profit from this short position. Another example would be, which is where it comes into risk management, is that say this just keeps on, and rather than this being a losing position, well, it will be a losing position because this will stop out, still making profit with the original long that you opened down here. So there's one thing I just wanted to add on to the end of this video, is to be aware of over trading. Normally I stick by, if I've done 3 losing positions in one day, I kind of step away from the charts and kind of keep my mind busy doing something else. Because if you over trade or do many 2 losing positions, you can end up revenge trading and losing more of your money than necessary. You want to go into it with a clear mind so you can analyze the chart properly without emotions. And that's the end of this section and the end of the video. I may not have covered everything. I may have missed a few things out. I just want to get this video kind of up and get this series kind of known. So yeah, the next video I'm not sure what it's going to be about, but it should be going up Monday. And then we'll kind of see more about how I trade personally and different indicators and stuff. So anyway, have a good weekend, and I hope you make lots of money. Goodbye.